Greetings, this is Dr. Jeffrey Scott, and this is my market update for January 15th, 2025 for Market MRI Pro, and I title this Market Bounce on a Favorable CPI. My email address is marketmripro@gmail.com. Sorry that I haven't been active the last couple of days as I've been at the JP Morgan Healthcare Conference in San Francisco, and between the 3 hours of getting adjusted and the late nights at the meetings, this is the first night I'm really having a chance to go ahead and talk about what I'm seeing. Not that it's any different than what we projected over the weekend. As always, this is for educational purposes only. Anything I talk about, anything I recommend should be taken in the spirit of education, not investment advice. The intent of this video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You and you are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky, and you should consult with your financial advisor before making trades. I have tools for multiple platforms, and I am an independent trader. I do these videos pretty much exclusively for my Google group, although I'll place them on YouTube from time to time. This group is no cost, free. It's top-down trader. Just sign into Google Groups, click all groups, and find the group that you want to join. Join the group, and you can link or unlink your Google profile, choose an option of how you want to get notified. And I hope you'll find value. I'm not doing this to sell things, although when I do have something to sell, it will be announced through here. You don't have to own something of mine nor buy anything of mine to be part of this group. And I've really enjoyed the interactions when some of the members have started to share their thoughts and comments about the markets. So hopefully we'll see the group grow, and I will consider moving back to Discord at some point when I have more time to be responsive in a real-time basis. Speaking of real time, I am going to do a live event on January 25th, 9 a.m. Eastern. The invite will go out on my weekend update. It will include the invite with a link to register. The seats are limited to 100. Typically, that shouldn't be a problem. I'll probably stick it out on YouTube as well. No cost. It'll be how I approach the markets from a top-down perspective. Why top-down? What tools? What does a high-value trading opportunity look like, and how do I trade them? We'll utilize multiple tool sets. We'll introduce the Market MRI app officially, and we'll take 5 beta testers from that live event, and then we'll launch it to the group as a whole as a paid tool probably 2 to 3 weeks after that event. The first invites will come to this group, and I'm not a hard sell. I'm not doing this to solicit. I'm not doing this to take your money. If you like what I have, you want to buy it, great. If not, you want to learn, make your own tools, I'm good with that as well. One of the things that I like to do is create a group of leaders. We created this on November 24th. And because when this breaks down, the market breaks down. And if you think about the market over the last couple of weeks, my market timing model being mixed, a lot of things have said that the market has changed, and it has changed, but it hasn't broken down to the point where I've gone to cash and all short. I certainly did have some contras, but I'm still predominantly long, and I've talked about that, although my cash position, much different than it was at Thanksgiving. So here is on Wednesday in the market, and big move up and down. You could see topping and bottoming tails on this candle and still holding right above the 50. That is my line in the sand. I mean, you could say it's broken down already. But from my opinion, is a break of the 50, close below the 50, then I'm out, and I will liquidate most of my positions. Sometimes I'll put an asterisk and say if it doesn't open back up in the next day, then I'll liquidate. Because I pretty much do my trading end of day. So this is almost broken down, but it's just got a glimmer of hope left. Let's take a look at the markets. For the most part, I'm going to be using the Market MRI Pro tool, which is, I think, awesome. Praveen's done an amazing job. We met this evening in San Francisco and went over a few of the things I'd like to change. I've taken some of the feedback that people have given that they'd like to see additional scanning and tools. And we'll get all that done in order of what, we'll be risk stratifying that as we go. So let's take a look at the timing model. Big changes, good and bad. If you're long or you're short, there's something for you. We'll start with the bad. On the weekly model, unless we see a big move up like we saw Tuesday and Wednesday and Thursday and Friday, we are likely to close below the WMA on the spider, which means we would flip on the buy-sell model on the weekly spiders. We are already on the, make sure we're looking at weekly charts here. I think we are. We have also flipped on the weekly diamonds. We had flipped previously on the IWM, and we are just above the 50 on the Qs. So we are on the verge of an avert sell signal in this market. And so if you just look at this, it's easy to feel pretty negative. Notice that the 13-week new high, new lows are at points that we expect to see a reversal. And you could see the reversal here, the reversal here came at points that the 13-week or 3-month new high, new low were at higher levels on some of the indices. So beaten up, yes. Worse than it was a week ago, yes. Close to reversal, maybe. If we look at the daily, you can see the optimism. The daily shows on the daily charts, we've actually bounced off those lows with the 3-week or 13-week, 3-month new high, new low. And look at what happened. We crossed above the WMA and flipped the bongos on the spiders, on the diamonds, and on the Russell. So, short-term feeling a little bit more optimism. I'm going to leave it at that. Still needs to be proven. With the longer-term signals decidedly bearish, I'm still very cautious in keeping a cash position. But these are intriguing to me that we saw here on the daily. If we look at the U.S. index ETFs, we could see the spider seeing resistance at the 50, but up on Wednesday. Big move on the Qs, taking the 50 and closing above. We can look at the diamonds, still has to get above the 50. The Russell had a big move, but a red candle as it closed in the lower part of their bar. The VIX had a significant drop down. And the dollar, at least looking at the UUP, failed at the 50 and came down. Now, if we look at commodities, we can see gold, silver had nice sessions, both getting above their 50 and above their 200. Oil has broken out, and you can see some leadership coming in energy. Natural gas has withstood 2 retests of the 200 and is poised to go higher. We've been talking about that for a couple of weeks. And if you look at the IEF and the TLT, I believe the 10 and the 20-year bonds, you could see a big jump in bond price. Now, what does the bond price going up mean? It means that if I was to look at, we've got to get the ETFs for 10 and 30 year to change from the bond prices, but you could see a big breakdown here on the 10-year rate so it was down almost 10%. But that can't be right. Let's look at this again. Down 4%. And you could see a drop in the 30-year as well. So rates eased in the market. Now the dollar is interesting because if you look at the UUP, it has failed the 50, and that's with dollar down, 50 down, and the 10-year and 30-year down. That's very optimistic for the markets. What's interesting is look at the UUP and then look at the dollar futures. You see something very different. And we've talked about that over the last week, that there must have been some resetting of the UUP. All right, enough of that. So major indices look better. Still, many of them approaching the 50, which could be an area of resistance. If we look at what happened in the markets on Wednesday, and we look at one day change, 1 day change, Q's led up 2.3, IWM almost 1.97, 1.81 on the spiders, the diamonds at 1.65, and you could see for the most part we closed in the upper part of the range. The Russell actually came off the highs despite a very strong performance. If we look at 1 day change on the S&P 500 ETFs for the sectors, so we'll get that to work. You can see we were led by financials, discretionary, tech, communications, and energy. Really bunched up high. Utilities did well. The only thing down was consumer staples, which are defensive. If we look at some of the themes for leadership, blockchain, or data sharing rather, social media, robotics, home construction, fintech, autonomous electronic vehicles, semiconductors, e-commerce, artificial intelligence, biotech. And you know what's kind of cool? These are high growth stock industry groups. So that suggests to me that high growth stock investing is working this week, or at least worked on Wednesday. When we look at the S&P 1500, the NASDAQ, and the NYSE, and the breakdown of positive sectors, almost all the sectors were up. Industry groups 84, 85, and 86, and stocks 80, 70, and 78. That is a massive change from a week ago when most of the sectors and industry groups were down and stocks up were closer to 30%. So that's an improvement. If we look at the new high, new lows, the net numbers, especially at the longer time frames, are pretty low, but they've mostly turned positive. That's an improvement. If we look at the buckets, you'll see what I would refer to as a right shift, as the number of stocks trading below the Bollinger Bands, or the lower part, as shown in the skinnier of in the gray bar, has shifted, and you can see the real-time big drop in the number of buckets and the stocks in the lower buckets, and look at the increases that we're seeing at the higher end. So we've seen a pretty big shift, but not to overbought areas in the distribution of the buckets. All right, now let's take a look at market breadth, and we'll see that none of our phoenixes, eurekas, bingos or bangos fired in this session, but you could see the stocks above the 217 and 50 have come up off their lows. As the market has gone sideways, that's probably a positive divergence, and similar over here on the NASDAQ as it was on the NYSE. So areas of improvement for sure. Still mixed with, still have to consider their risk with 3 out of 4 on the weeklies. If we look at some of the sector performance versus the spider, let me call out some key. Discretionary looks good and staples looks horrible. Industrials helped a little bit better, as were healthcare, but financials and energy are probably where the strength is. If we go into the layout, I'm looking at the JAS group, which includes all stocks in the NYSE and the NASDAQ. I think I asked Praveen to add the Amex. I'll make sure. And then they're filtered for $1 and 100,000 shares. This number will vary depending upon stock prices, but right now it's 35.41. And with this tool, we can look at bottoms up or top down. Let's start with top down. We hit the top down, and we could rank by percent change on the day. And you could see, we get, that's right. You could see financial services, communications, and technology. We can look over here at industry groups, and we can look at which were the best ones from a top-down perspective. And you could see real estate services, computer hardware, oil, gas drilling, mortgages, credit services, and aluminum. Now, as a top-down person, I could click on financial sectors. This brings up the 429 stocks in those sectors, or I could come in here and highlight the top 3 of the groups, mortgages, credit services, and global. That gives us 45 stocks, and there's many different ways of ranking. I like my short-term FM2 A momentum indicator, and we can look through at some of these. Sezzle, expensive stock, came out of nowhere on my radar. I'm still well below the 50. MA, breaking back up above the 50, not extended. Volume breakout momentum, you're crossing over today on the relative strength, and your OBV looks good. I think MA looks very interesting here, so I'm going to click on it. Oh, it was funny. Praveen showed me what to do, and I'm still having issues getting it to, I'm trying to remember what I'm supposed to remember. It's fine developing software, but I also have to remember what I was told to do with it. Oh well, let's leave it like that for right now. So here we are. Let's rank by the FM2 again. AXP, how's that look? Wow. Pull back into the 50 in a big breakout this session. Coming right out of a squeeze. Relative strength and OBV look good. I mean, these are both look good. All right, what about Bank One? Also very attractive. Discover. Anybody want to believe that credit cards are something to be thinking about right now? WD. Not so exciting. Upstart. APO. Getting there. ENVA. Beautiful. Nice uptrend. Pull back to the 50 in a breakout. With relative strength above its moving average and OBV above its moving average. Like both of those. So you could see there's a lot of stocks to like. Visa. Sideways move. Pull back to the 50 in a breakout. Pick your poison. Several of those look exciting to me. So clearly from a top-down perspective, you can look in the top industry groups and the top sectors and get an idea. I think this really does a great job of looking at the markets that way. If you go back to the impulse indicator, those who've been around know that my favorite is to look for 2 days of Kahuna Force. Kahuna Force requires a %B change greater than 0.24 in the same direction, bullish or bearish, as Alexander Elder's 2-day force. The idea is to filter out those signals that are contradictory. So let's go into my filter list. Let's put on a volume greater than 500,000. Let's buy only things above the 200-day moving average, price greater than 5, and a 2-day force up. Let's hit OK, and you're going to see a modest list pop up. Now, that's incredible if 65 stocks actually make that. So let's take a look at some of them. That's a very big number. ADT, 2 force kahunas in a row, above the 200, not the pattern I like. Let's see what the next one is. AEG, nope. AESI, I'm looking for really attractive patterns. AFL, get above the 50. ARES, I like that one a lot. Uptrend, sideways movement, pull back to the 50, breaking out. So I would have put that into my list. Okay, let's go to the next one. ASB, I keep running through. BKU, I don't like that we're closed at the low of the session, but here's one that broke above the 50. I just want tighter looking patterns. BMO, BKRL, CFG, CG Carlyle Group, CGNT, a software, CMA, and I'm just hitting the down button and I'm going through these. I think Bank One looks great. Let's add that to my list. Discover looks great. Add it to my list. And I could go through this, and I'm just going to flip through while I'm talking and identify stocks that look attractive. This is a bottoms-up view. I'm not paying attention to what industry group. I'm not paying attention to what the market is doing. I am specifically looking at chart patterns, and this is one that I identified, which is the 2 kahuna forces up in a row on a single session. And I'm just running through the list very quickly to see if anything else is as good as Bank One and Discover. I mean, Robinhood is one of my bigger holdings. Big run up, sideways move and a breakout. I like that one. Some of these are probably getting expensive, and I just keep going through the list and seeing if anything looks better than what I picked out. LPX looked pretty good. Macon Technology, big run up, sideways move, getting ready to break out. And we've now activated the line function. And I might do something like that and say, whoa, that stock's breaking out. So that might be something that I add to my list. So let's add Mitzi. Keep on going, ONB. For those that have been watching this tool for any length of time, you could see that we fixed the speed. Power Technology, looks good. Patrick Industries. I'm being pretty tough on these picks. I like Primoris, uptrend, pull back to the 50 and a breakout. So I could be adding these to the list as we go. Let me just finish the alphabet. PWP, don't know that from Adams, but what a nice tight chart. Pull back to the 50. I'm going to add that to my list. PayPal. Ooh, look at SAP. Similar web, beautiful breakout. Getting extended, it's at 100%, as you can see up here. Makes me a little cautious to chase. Synchrony looks good. You notice how many of these are regional banks? All right, so what I've now done is I've created a small watch list we'll go look at. So let's clear this. Back up to our 35.41, and you should see under hot list, and Apple was one I forgot to remove. Let me remove it. You can see some of the stocks we picked. And so what I can do here is I could copy them and paste them to something else. I could, see if I go hit that. We will have built in the ability to export this so you can import into TradeStation, TradingView. And you always, if I don't have TradingView turned on, but if I did, you can always open the charts in TradingView. So that was a quick look at the markets. I think it's an interesting time. The longer term look bad, but the shorter terms are turning around. Do we run up into the inauguration next week? I think so. But after that, it depends on President Tariff and what he says. Have a great day in the market on Thursday, and we'll talk to you again soon.